Hello, good afternoon, ladies and gentlemen. I believe that you're okay. Thank you so much. And we're happy that you've managed to make it up to join. This is the session of a property management, accounting, and taxation webinar. So I hope that we are all geared to learn more. It's my pleasure that you are up. So as we begin, my name is Franklin. Allow me to just pray as we begin. So wherever you are, ladies and gentlemen, please let's believe and pray. And we say the most merciful, the most gracious, we come unto you this afternoon. Thank you for everything, and thank you for blessing us with the ability to converge here and learn 1, 2, 3 things that are going to be useful for our professional life tomorrow. Oh Lord, guide us and let all the deliberations be according to your will. I pray, believing in your holy name. Amen. Thank you, ladies and gentlemen, and welcome to this session. As you can see the program, try and share the program so that we can learn together. Yes. Let's try and rename all our
live. Mtu anaweza kuuzia.
Yes, I don't know. Joel Simio, you can unmute.
When you are ready. When you are ready.
Okay. Thank you, Bwana Maina. Kindly say hi to the participants, and maybe you can welcome a few council members that are around before we take it to another level of the session. Bwana Maina, karibu.
Who is in the host? Pendo? Oh, thank you, Secretariat, for that arrangement. And hi to all the participants and fellow members of ISK. My name is John Maina, the Chair ERC, and wish to welcome you to this session. And before I proceed to invite the President to speak and officially open the training, I would wish to have the council members in the session to say hi, starting with the session moderator, who is Joel Simiu. Just saying hi.
Hey.
Hi.
Hello, hi. I don't know if you can hear me, members.
Yeah, we can hear you.
Okay, hi. I would first of all like to say thank you.
Council member, because I cannot themselves and say hi.
Yes, this is Joel. Vincent, please, if you can unmute, you can mute yourself. Sorry, my name is Joel Simiu, serving as the Chapter Secretary for Property Management, and I'm glad to have this session. The speakers are very well-seasoned seniors with whom we highly hold in high esteem within our industry. So we are looking at a very good session. Thank you. If someone could unmute Vincent. mute Vincent Okello, please. Thank you, Chair.
Thank you. Any other council member who is in the session can quickly be unmute himself or herself and say hi. Pedro, bet you can unmute any council member you support on the session. Hello.
Hello, Bono Minor. Yes, we are trying.
It appears there's no other council member. It appears, and if they are there and they are not speaking, then on their behalf, I say hi to all members who are present, so that we can go back to our scheduled presentations. And on behalf of the council members who could be present and maybe listen or they are not able to speak, I greet you all, and we're carried out engagement session or membership. We have free session so that they can enable a lot of members to participate and gain from the vast experiences from some of us who have been in industry for all. And at the end of it all, it will give us some CPD points as part of our professional growth. And with that, I don't wish to continue because I know the main session will have very experienced presenters who will take us through. And I wish you a good engagement. It's my prayer that the president of the institution, Mr. Abraham Samway, is within us. And if he is within us, I wish to
Good afternoon, members. Thank you very much, John. I think I'm very happy to join colleagues in this afternoon's training session. A very important activity for the institution. John, as our CBT Education and Research Chair, has ensured that we have access to current training and the requirements of members. So I want to thank him and his committee that they have been able to put up a blend of free and what I would say paid training programs for our members. These trainings are very important because they sharpen us as we listen to insights and experiences from colleagues in industry. So I'm also very happy that James and Vincent agreed to take this session. I think I've known them since I was a student at the university, and at that time they were practicing. So I know we'll benefit a lot from their experience in property management, in property accounting, and matters property taxation. So mine was just to welcome and open the session and thank everyone for making time to be part of this session. CPD is a very important program for professionals. So you finding time to be trained means you care about the profession and also your career. So I would want to encourage you that you also participate in the other programs that are coming through the year, not just for CPD points. I am members of some groups, and the feedback I see is people are very keen on CPD points, and they forget that the learning outcome is also very, very important. So I want that to encourage you to ensure that you attend those training programs, because they are tailor-made based on feedback received from you on the training requirements. So with that, I would want to say the session is officially open, and I wish you very good deliberations and learning, listening to the experts that we have today. Thank you very much.
Thank you, President Samuel. And without much ado, I will take the mantle back to the host, Pedro and the team as Secretariat, to actually usher in the moderator, and we get the ball rolling. Over to you.
Thank you, Bonamina, and also the President for the welcoming remark. Maybe allow me to welcome Bwana Joel to take it over from here, and also the presenter to give us what he has prepared for us. So Bwana Joel, kindly unmute to say hi as you take it over from here.
Thank you very much, Pendo. Without further ado, it is my honor and pleasure to invite the first presenter, Mr. James Kerrago. Mr. Kerrago was my first experience outside of campus. It gave me the opportunity to venture into property management. So I owe to where I'm here to him, and I'm glad that he's able to join us today for the session. Welcome, Sana Senior James Kerrago. Thank you.
Thank you, Joel. Good afternoon, President ISK, Mr. Samoei, council members, and participants. My name is James Kerrago. I'm a registered value and property manager with about 30 years experience across valuation, property management, and estate agency. And I'm looking forward to this session and to share my experiences. I want to use this presentation that I hope you can now see. Joel, maybe kindly confirm for me.
We can't see the presentation as yet.
Sorry, members, is it there yet?
Yeah, it's visible. It's visible now. Thank you.
Okay, so I wanted to start with, it is in 5 parts, basically. The first of which is, I would like to talk about the property management, its definition. Basically, almost its philosophy, because why do property owners need property managers? And it is not, I think one has to look at this from the context of what is a client looking for? And not so much in terms of when you approach a client to pay management fees, but what are you going to deliver to them? But for most property owners, of course, property largely in the context of property management is seen as an investment. And therefore, to the first point, they're looking for investment returns to maximize those. They're also looking for their properties to be run well, dry property operations. to be maintained well in terms of functionality and the structures and maintenance. And over the longer term, of course, they are looking for capital appreciation. And therefore, how do you go about this when we want?
I think we have lost the speaker. Oh, it's back. Sorry. So Kerrago, please unmute. You're on mute.
Are we together now?
Yes.
Sorry for that disruption. So I was giving the background in terms of we were around this point. In terms of the different types of properties, of course, we have residential rental properties, commercial and industrial. What we call, I will generally refer to as sectional, where you're managing common area facilities, where different unit owners, either residential or commercial, own different units within one property. And of course, there is facilities management, likely done for institutions like banks who need to have their facilities managed. We are together so far?
Yes.
So the second part of this is beyond that opening and philosophy, is to outline what are the objectives. So having said that, and I'm taking this largely in the context of rental properties, investment properties, but of course, as I indicated, there will be others that are not directly geared towards rental returns. The sectional properties are referred to in the facilities. So the first point is for rental properties to achieve that return, you're looking at, of course, getting tenants at what might the best market rentals you can achieve to the client's optimal financial advantage. You are also looking to ensure that your tenants and unit owners, as may be applicable, have proper leases and other contractual documentation. As part of the operations, number 3, you're managing the services on a property, the utilities, the maintenance, and other operational aspects to the best and cost-effective standards. Standards and costs, those two I'll elaborate a bit further. Part of the maintenance is, of course, to ensure structural integrity. A major part of course, property management, rental properties, is collection of the rental income, car parking income, service charges, and other collectibles as may be applicable. The next one, of course, is these are financial transactions and situations. So it is important to have proper accounts and record maintained and provided to the client. 7, statements and reports. When these are generated, it is important they get to the client consistently, usually on a monthly basis, so that clients are able to know what is going on the assignments and the investments and properties. 8, statutory obligations. These are primarily ground rent rates. VAT applies on commercial properties, and the others that are regulatory. For example, fire certificates largely on commercial properties. 9, good business and professional relationships across board, across the clients, across tenants. Tenants are the ones who generate revenue, so it's important to have to maintain those relationships. And then you want to make sure that the client is kept properly briefed and advised. Because with what I opened, the reason why a client will retain a professional manager is to make sure that they are also advised on how to handle various aspects whether legal, regulatory, statutory, and therefore they rely on us to maintain that advice. Now, the next part of this is letting and lease administration. I would start by saying that, in fact, before you're managing properties, of course, you need tenants. Remember, again, I'm taking it from largely for the context of rental properties. So, because to have rentals to manage, the tenants have to be there. So what is involved? And I like to say that good property management starts with good letting. You get good tenants, paying good rents and other revenues, and under good contractual terms. Now, for commercial properties, to which this presentation is largely oriented, the first aspect, of course, as we know, is that commercial properties, the basic calculation of rent is the lettable area. So it is important to start with accurate lettable areas, including right down to issues like common area apportionments. Then, having done that, then you go to the next step, which is advising, assessing and advising what are the optimal or the best terms in terms of the rentals and other terms. Typically for commercial properties, apart from the rentals, there are factors such as rental escalations. Currently, for example, I believe on average, across most properties, situations and niches, we are looking at rental escalation rates of approximately between 10 and 15% per annum. But of course, in the recent times, with what we know, the challenges and situation in the market, that is something that is variable and is basically negotiable. So, of course, that is set based on the market, as it were, but ultimately trying to maximize the best terms for your client, the landlord. Now, once that is done, then you set your terms, which is the heads of terms, which I think we also generally also refer to as the offer letter, setting out the principal terms under which you're going to let out premises, which precedes the lease, point number 4, lease documents. Because for commercial properties, then you enter into a formal lease, usually for a term of at least 5 years. I think the average now is 6 years as a market practice, with escalations usually either on a yearly basis, but I think more commonly on every 2 years. You will basically be aware that under commercial leases, apart from capturing the commercial terms, is to avoid legal complications with control tenants under the Landlord and Tenant Act, Cap 301. So that is the contracting part largely. And once that is done, of course, once you have heads of terms, then this goes to advocates who then prepare formal leases. As a little point of experience, for a long time, I found that just speaking to this point in particular is to ensure that not just the heads of terms are signed, but even the lease documents themselves are signed before you give possession. Because typically what happens when you don't do that, is that you'll have a situation where tenants may not sign leases for a long time. So basically signing of leases before giving possession. That's just a little tip from experience. Now, to achieve tenants, of course, you need to do marketing, depending on scenario. In the scenario, it may be either a new building, it may be an old building, but you then have to have a strategy. What market niche are you in? How are you going to, secure these tenants? What advertising and marketing initiatives are you going to use? They are the traditional ones, of course, advertising in the newspapers, which was there before, and it's still there even today. You have letting boards on site, but of course, a lot of this marketing today is online driven with the change in technology and methods. And the key steps, in my experience, is of course you first need to identify your target market groups, potential tenants. It depends on what type of building, office building. It could be a mall. It could be residential apartments. So all these are different niches of the market which you need to identify and see how best to then get the tenants. Once that is, and the key parts of that is the first one I mentioned. It may well be that depending on the size of the property, you may have a budget for advertising. There are parts like tenants come into view premises. And also there is vetting of prospective tenants, because of course, once you're looking and you get inquiries, it is not automatic that every inquiry you get will lead to a good tenant. So there is a basic process of application and vetting. And typically for commercial premises, you would have an application letter setting out what premises have been applied for, what is the nature of the business, who are the directors, experience, and perhaps with documents such as the bank statements or bank references that support the application. Once you're satisfied with that, and the client, prospective tenant, matches the premises you're offering, you go to the next step, which is the signing of documents. So you prepare your heads of terms or offer letter. Now, for commercial properties, once that is done, then the lawyers, advocates are involved, because formally for commercial properties, you do a full formal lease, depending on the nature of the title. And commercial properties by their nature, the number of issues, commercial considerations, legal considerations is that you have a more formal lease, which ideally and eventually will be stamped and registered. For residential properties, I think the practice is what we call tenancy agreements, which are a simpler form of tenancy documentation. And for most of the managers, I believe we do that in-house. Once that is done, tenants execute documents, sign, pay their deposits. There is a next step, which is handing over. And this is an important step as well. It tends to be administrative. In fact, in a lot of cases, handled even by the caretakers on the premises. But it's important to keep a record of a handover, the condition of the premises it was handed over, issues like utility recordings, you're handing over keys, the condition of the premises, because that becomes the point of reference when the tenant eventually exits 1 year, 2 years, 5 years, 10 years down the road, or even longer. And if that is not on record properly, sometimes you find that then you have challenges in terms of handing back of premises, redecoration, and issues like those. The next point is you have tenancy agreements, which depending on their term, they will run and they will expire. For the commercial leases, we indicated that the typical lease term is 6 years. So every 6 years, you have a situation where you have to, depending on the history of the tenancy, whether the parties are happy with each other, the tenants have been meeting their obligations, paying their rent, then you negotiate a renewal. It used to be, incidentally, when I first started in the profession, it was not like with regard to the issue of escalations. If I go back a bit, we had situations where lease escalations were left to open market rents. This is about 25 years ago. But typically we found that agreeing on rentals was always a challenge, usually leading to situations requiring arbitration. So the market has evolved to such that it is simpler now to simply have prefix escalations. Again, on average, 10 to 15% every 2 years. Now, then of course, the reason you have leases, there's an aspect of administering those leases to ensure that all parties, landlord, tenant, but usually then the tenants, because it's your job to administer that, adhere to the terms with regard to paying their rents on time, the use of the premises, you have a user, they maintain the premises properly, because eventually then they will hand them back in the condition in which they took them over. That is largely the profile and the key areas and steps with regard to letting. Now, to the next part. Now you have tenants, you come to the actual property management and operations. The first point, of course, is a key part of property management is rent collection, collecting all the due rent, service charges, and the others, car parking fees, perhaps, where you're parking, signage costs, revenues. In some properties, you have the telecom mass. So that's a basic profile of the types of revenues. But of course, rent and service charge and perhaps car parking are the largest. So the basic process, of course, is billing monthly or quarterly, as the case may be. Commercial usually quarterly, residential on a monthly basis. For the sectional properties, again, it depends on whether it is commercial or residential. Now, then you apply a service charge. This largely applies to the commercial and sectional properties. The basic objective and structure of a service charge is for the tenants to contribute to a share of the operating costs, services, hence the service charge. And those are the basic components. The basic components of this are the utilities, services such as security and cleaning, gardening, maintenance of plant and equipment, common areas and grounds, parking gardens as may be applicable. There is also insurance. Insurance has been, in my experience, as we go along, sometimes contested. Tenants have argued that the property belongs to the landlord. You know, they would insure the property even if we are not on the property. So that's a point of sometimes debate, so to speak, when administering a service charge. Then you have staff on properties, typically caretakers. Sometimes you do engage service personnel, security and gardeners perhaps, but the recommendation and the practice is largely to outsource to professional service providers. The rest, the other larger ones, of course, the statutory payments, ground rent and rates, and then there may be administrative costs. But of course, Jay, you're also doing this for a fee. At the end of the day, this is the consideration for managing the property. And those are administered and are set out by the relevant statute, basically under the Estate Agents Act. Now, it is important to regularly monitor, review the service charge to ensure that the rates are adequate and they can cover the financial cost of the services and operations. That is typically or usually through budgets at the beginning of every financial year, and then audits at the end of the financial year. And then there's a recovery mechanism for depending on the outcome of the audits to both adjust the rate of service charge if that is necessary, and recover what we usually call the service charge deficit, the difference between what the tenants paid in terms of service charge deposit at the beginning of the financial year and their actual costs. Then, of course, all the services, services usually been mainly against security, gardening. There will be various other operations like management of parking, their utilities, electricity and water. For the service providers, the typical key areas of having this implemented is how you engage them, choosing the right security companies and the right cleaning companies. Once that is done, of course, you'll have both the service contracts and what, in a good situation, you want to have what we call SOPs, standard operation procedures. This is what sets up the operational requirements for the service provider on the ground on a regular, recurrent, daily, weekly, monthly basis. What are they supposed to deliver? Issues like equipment and uniform. Then you have supervision modalities. I found that is typically best done through regular meetings. It could be on a monthly basis or on a quarterly basis to review the delivery of the service. Of course, if there is a need, it does arise occasionally. If there's a problem, if there is an issue where there's a shortcoming in the delivery, then you can call meetings and discuss and iron out those situations. These I mostly find to be with the security companies. Of course, security is a fairly important and sometimes a sensitive issue. Service contracts, these are again for the services, and then there will be others for plant and equipment maintenance, lifts, generators, pumps, CCTV. Apart from actually getting the right provider, of course, the other important thing, because management of costs within both the leases and the service charge budgets and arrangements is an important aspect. So that then presumes that when you engage the service providers, you go through a competitive hiring process so that you get the most cost-effective with a balance towards the value of the service and the quality of service you're getting. Now, the monthly and periodic accounts and reports, although I'm sure my colleague Valia Kipto will address that in fuller detail. Usually then to your client, you send monthly statements detailing properly the receipts and expenditure, tenant payments and tenant balances, that is arrears. It is also usually good practice for the larger properties to deliver quarterly summaries and reports, because most property management scenarios and most organizations and companies have a quarterly reporting requirement and cycle. And it is during these quarterly reports that usually you'll find that you're able to engage with the clients on a regular basis to address both the financial performance of the property, the status of maintenance and services, and any issues that need to be addressed. For example, if there are any repair requirements, CapEx requirements, for example, improvements, this is the issue cycle, other than where perhaps something has to be attended on a more urgent basis. Point number 6, VAT on rent. Again, usually commercial properties. Again, my colleague Vincent will speak to that in more detail. But as a function of property management, then you bill and collect VAT where applicable. Current rate 16% with a threshold of income of 5 million per year. And ETR administration, which is basically just handling the ETRs. For example, we are aware now that KRA has introduced a new procedure, a type of ETR, effective 1st of August. So you actually find that, and this is an important part, tax being an important aspect of property management to ensure it is handled properly. Annual budgets are good practice, not always applicable, or not always, not all clients may ask for them or require them, but it is a good practice to have them, because then it sets your targets in terms of financial performance, expectations, cost management, cost budgeting, and monitoring. Eventually, 8, at the end of each financial year, you carry out service charge audits, again, largely for commercial and sectional properties. It is both good financial practice, where you are good financial transactions. And this is actually then normally part of the conditions of the lease. It's also an obligation to tenants as part of the service charge recovery and adjustment mechanism to provide service charge audits. Even just for transparency, and again, just good prudent management. Insurance is the other key area. You have your insurance to cover various risks, fire, and other losses. Not all of them are applicable. Public liability is an important one, loss of rent. You can have all risks. Terrorism and political risk, that I would call, it's more of a special cover area. It doesn't apply usually to all properties. It is also expensive. So if you are to add on that particular cover aspect, one has to assess the real risk depending on the type of property and its location. For example, something like a mall, obviously, with the experiences in that area, is usually a higher risk, therefore warranting this particular cover. Now, to ensure adequacy, the guideline to carry out valuations is to, every 3 years is a prudent timing and cycle. Usually those may be done formally as formal valuations alongside other valuations that the clients or institutions may carry out. Otherwise, they can be done as internal assessments. Statutory payments, ground rent and rates, and local ground rent and local authority rates, those are fairly straightforward. But maybe not with the current issues that we are aware relating to getting the amounts payable. I'm sure you're alive to the issues with getting the payable amounts through ATISASA, which is a current issue, but a different topic, but there we are. Repairs and maintenance, maintenance programs that you maintain. These can be both scheduled for items like, for example, lifts, because the lift companies will have a scheduled maintenance and they'll actually drive that. But it's important to maintain your own programs, which includes periodic inspection, physical inspection of the facilities. Now, depending on the size of the property, for the larger commercial properties and depending on the staff level, caretakers, for example, carry out inspections on a weekly, sometimes even on a daily basis, working around making sure that everything is in order. And then items like the physical aspects of the property can be done either on a monthly basis or on a quarterly basis. This probably is a factor of, I would say, the age of the building. So older properties probably require a higher level of maintenance monitoring. Tenant communications. On the properties, you have tenants or unit owners as may be for sectional properties. For investment and rental properties, it is important perhaps to recognize that it is the tenants who generate the revenue. They're the ones who pay the rentals. And so it is usually important to have a good relationship with them, even just to ease your work, to help you achieve your objectives. And in any case, good business relationships are important in most scenarios. So, but the triangle here is the landlord, the tenant, and the property manager as an intermediary. The property manager probably has more responsibility in ensuring these communications are maintained. You will also have personnel administration, the staffing on your properties, depending on the size and nature of the property. You have property managers. You have property managers on site, depending on whether you have a site office. You have your property accountants, usually at your head office. You have the caretakers on site. Most multi-tenanted properties will have one. There could be other site staff, like I mentioned, either in maintenance or particular services. And then, of course, you have equipment of the properties, whether it is office equipment, maintenance equipment. That is basically the scope of the personnel administration. So that is the outline of property management. Now, what are perhaps my specific experiences and observations? The first one is, of course, and with time, you need a very good understanding of relevant statutes and regulations on land matters. building regulations, tax matters. We mentioned, for example, the issue of VAT. There is withholding tax on payments to service providers. And even items like labor law, because we're also dealing with staff issues. What is the minimum wage, for example, where you're going to engage either gardeners or security personnel, which, though I said usually outsource, but still, even for your own staff, you need to have that online understanding. Market factors and dynamics. Having said that, our role is to ensure that these properties generate returns and they are competitive. Of course, we need to understand the overall market scenario. What are the passing rentals, prices, trends? Is the trend on rental movement upwards, downwards, not moving? And that informs your decision with regard to how you set your rents and advise clients. Understanding property structures and equipment, as much as some of this equipment is specialized equipment with specialized and dedicated service providers, it is important in my experience to have, and this is gained with time, understanding the basics of, technical basics of items like pumps, boreholes, generators, and lifts. Borehole is one good example at one situation just this week, where you have the boreholes, and what you are now finding is that this is somewhere in Upper Hill, where the borehole shaft is affected for one reason or another. So understanding the process of fixing a situation like that then becomes and who to engage, how to engage them based on experience becomes important as you get the expert advice. Good marketing skills, I mentioned you need to get tenants, so you need to understand how to market properties to secure tenants. There will be IT aspects because, of course, in today's world, technology is a big part of how we do everything, whether it is computers, softwares and applications, accounting software, and everything else, information related, IT related. You may have, of course, administrative departments or people who deal with this, but on the basic operating level, that, of course, is an important function. Now, sectional properties. This is where you're managing what we might otherwise call common area, shared area properties. There are different unit owners, of course, who own different apartments or office suites. The job of the property manager is to manage the common facilities, the common areas, and equipment. One of the things that we are probably aware of and have observed is that it's very, very important to have a good recovery mechanism. What happens if any unit owner does not pay their service charge or otherwise breaches the terms of the sublease, the title sublease? Because unlike a rental property where the basic legal mechanism is to distress for rent, service charge situations are a bit different. So typically I found that this is something that starts right from the design stage, such that the management company, and by management here, I mean the company that holds the common areas and reversionary interests, has a mechanism to enforce payment and other terms where applicable. And typically this is done by designing it such that you control, or the management company controls something, a utility, usually water or electricity. And so that basically, if all else fails, and then the leases provide that you can deny those services. A contestable area, in my experience, in fact, it is one of the areas that leads to quite a bit of litigation when people dispute such actions. But yes, that is something to look out for as you get engaged. I've also found that sectional properties are increasingly leading to a situation where you are managing not just property, you're actually managing companies. because then you have a company, the shareholders are the unit owners, and it is increasingly falling upon the property managers, not a previous typical traditional role, to run such issues as the shareholder registers, usually, of course, with the company secretary, the returns on a yearly basis of the directors, and even such things as organizing AGMs of the shareholders, because initially you are also responsible for the financial management, and eventually the audits, and the next step after that is to have AGMs. So an increasing area which I think property managers need to be alive to, and to be able to demonstrate added value in that area. And the other softer skills and issues, these are more, I would say, personal. To achieve anything, of course, I believe that you need to have a good attention to detail when handling matters, communications, the standard and quality of communication writing, and writing such that when an issue, an advice is communicated, it is clear to the recipient party, whether it is a client or a tenant or a unit owner in a sectional property situation. Of course, it's always good to be able to act and dispense with issues in an expeditious manner. Finally, ultimately, you have to deliver what you are supposed to deliver and demonstrate value and professionalism in the way you handle the assignment. Remember, I started with, to take you back to the beginning, the philosophical question with regard to why does a client, why does a corporate, why does a property owner need a property manager? It is basically to then deliver all this in a professional manner, in a timely manner, and in a manner that demonstrates that the client is gaining from engaging a professional property manager. And therefore, participants, members, council, that is my quick summary of property management, handling, and experience. Thank you very much for listening. Back to you, moderator.
Thank you very much, Mr. Kerrago. That was well captured. I think now we have a very good overview of our roles that we partake as property managers, and how best to ensure that the practice that we do is more professional and current, and especially of value to our clientele. I won't take questions at the moment. I'd prefer that we go immediately to the second presenter. I am hoping that Valuer Vincent is ready for his presentation. Then you can capture all your concerns and questions on the comment section, or once we are done, then we can be able to have the Q&A. In the meantime, I'll allow Mr. Vincent to prepare and make the presentation kindly.
Thank you, Joy. Let me share the screen. Joy, you can hear me?
You are very clear, and the presentation can also be seen. If you can put it on full screen.
Okay, thank you, members. I hope you have taken a pause. The presentation by Mr. Kerrago was excellent and fairly detailed and practical. I hope you still have the strength to continue. This section will largely be probably more outside, of course, your area of practice as a property manager, but it's because it's a supportive part, and many times I think it is it is not considered as important by many of you. And but ultimately, I think if you have interacted with the statutory agencies, you will discover that actually this is probably the most important. So we'll, because of the short time, we'll just run through just to appraise you about accounts, and then of course create a linkage to your practice. Then go into taxation. Just run through the relevant parts of taxation. What I want to indicate to you at this early point is that each of them are actually large areas of study. Taxation is a very wide area, and there are specialists who are well in tune with that, and they spend a lot of time to study. Of course, accounts is a parallel profession, just like the various chapters we have in ISK. So principally, I'll just go and start with the philosophical component, which tries to answer the question, just the way Kerrago was saying. Why all this? Why are people in business? And the first thing is that we have to start with the thinking that real estate is not anything unique from the ordinary business. We get into it just the way somebody else gets into an industry, the way somebody else gets into a shop, it starts a business. So there are common objectives which we all desire to achieve by getting into property. And both as a professional and as a manager, which means you are performing your role as an agent, you'll find that the people you are serving have certain motives, they have certain objectives, why they are in that. In the same way, you as a professional, you have similar motivations. You want to make money. Nowadays, the young people are very keen in saying we want to make money. A good number of them want to make money before they reach the age of 30. So you will find that those are things which inform people in getting into business or even starting businesses. The other thing is that we all operate within a regulatory environment, which involves regulations. It also involves laws. And then we are also within a certain level, or we are expected to operate under some standards. So while you are in any business, you'll find that there are expectations, there are motives you need to pursue, but you operate within a certain regulatory environment, and you are expected to perform in a certain way that is acceptable to your customers and also acceptable to the regulatory agencies. So why then would you want to operate in that environment, and what are you supposed to do so that you're able to survive in that environment? You will discover that in whatever environment you're operating, whether you are a single person or whether you are in a big organization, you will discover that you will need people. And you will discover that the business environment is essentially a division between the owners, and many times, of course, they have to be employees. Now, there has to be a system to ensure that the decisions, either both by the employees, match those of the owners or those of the shareholders, so that you're able to exist and succeed as a business. So in a normal environment, you'll find that is what I share with the students who do ISK exams. You'll find that there are always conflicting interests. There are interests of employers, the interests of employees, the interest of our clients. And now you need to create an environment to balance that. And the purpose of that is about financial management. And I think that is the relevance of the subject we are getting into. So you'll find managers, of course, owners want to make profits. Managers and employees, depending on your category here, is that you might want to have a good salary, that salary needs to be increased. You will find that the clients want to make sure that they pay as little as possible to be able to minimize their costs. You will also find that even suppliers have certain interests. So how do we create that balance? We create that. How do we create that balance so that all the objectives are fulfilled? And so the question is that every organization has come up with strategies. You'll find that there are strategies to ensure that everybody acts in the same way. So you'll find in some of our companies, you'll find that over time, employees start becoming shareholders so that we can all have similar objectives. In other areas, you'll find that the ownership is spread so that most of the people who pursue the goals pursue it with a similar interest, or they're able to protect the interest of the company. But the most important tool in ensuring that the interest of a company or the interest of an individual is through implementing accounting systems. And you'll find most institutions or most organizations, they will have accounting systems. They will have, you will nowadays hear about corporate governance. You will find most organizations also have performance measurement. So the purpose of this presentation is to handle that component of accounts management or accounting systems. So that's why you have to interact with accounts. You interact with accounts because owners want to ensure that they have the interests of profit maximization or wealth creation is protected. So principally when it comes to property accounts, there are key things, and all of them are very important, and I think it is always important to emphasize it. You will find that in every organization, one of the challenges is records management. How do you create records? What records should you have? And how do those records translate into the accounting system? So many times you will find that in every organization, whether it's a small company or whether as an individual, you'll find that you need to have some records so that you can run your affairs. If you are going to the field, you need to take a ticket. When you go for an inspection, you are expected to produce a document that you went to the field and you spent some money. The other thing of records is that it also enables you.
Hello, Vincent.
Yes.
Oh, sorry to interrupt. If you could kindly put the presentation on full screen so that you can be able to see the presentation clearly, please. It's a request from the members.
And also, if Vincent, you can manage to tilt your screen so that these members can get your full profile kindly. Tilt it a little bit forward.
Let me set the slideshow.
From current slide.
It's okay. I'll be able to push it forward. Yeah.
Thank you.
Is that clear now?
That's better.
So we are at the level of records management. Okay. Okay, is it now clearer?
Yes, it's clear.
Joy,
yes. Thank you.
Is it okay? Okay.
Yes.
Yeah. Now, one of the challenges, of course, you come across in most of our practices is the issue of records management. They are very basic, but they are very important. You'll discover that with your records, you're able to plan, you're able to identify your expenses, and then you're able to plan your expenses. The other thing which, of course, confronts us at the end of the year is the issue of filing tax reports, making tax returns and all that. And you'll discover that that's very important if you have records. Then the other one, of course, is that how do we make decisions? you make decisions if you're able to track your expenses and you're able to track where money has gone into. The other one is, of course, you'll frequently have to ask yourself, where do I get money to fund my operations? And so it's emphasized that the key thing and in every organization is that there should be a proper system of recording. And so in your organization, you need to ensure that you identify what are the needs of your organization. You need to know what information you need to keep. You need to know a process, develop some process where you are able to create a record, keep it, and then you also remember how long you're supposed to keep it. And you also know the statutory limitations for keeping documents in Kenya, which is 7 years. Then you of course need to look at how you coordinate, who accesses what kind of information. And, when I talk about this information, it can be electronic, it can also be physical. And you'll find most of our information nowadays is electronic, which means you have to get a mechanism of protecting it. The other one is, of course, you have a retention policy and how long you'll keep it. Then once you are able to generate records and you are able to know what records to keep, then the other one is now bookkeeping. How do you maintain records which help you in terms of ensuring that you track your finances? Essentially, in the expectation for whether you are a sole proprietor or a big organization, you need to ensure all the transactions which result into a movement of money or a movement of assets. Everything has to be recorded. That is what accountants call bookkeeping. And you achieve this through developing a number of financial documents. So you, all of you are aware of things like the order book, the LSO, the invoice. Of course, you have to keep an inventory of your assets. And of course, the other very important simple document that you need to have a receipt, and that receipt book has to be maintained. Then that translates into documents. When you deliver your reports or you deliver whatever things you have, for your clients, you need to have a delivery note. You need to make sure that if you are a property manager, when you hire people to provide certain services, there has to be either an LSO or a purchasing order, depending on whether it's goods or whether it is services. So those things then are used by your accountants to develop or to update what are called ledgers, what are called cash books. And I don't want to get into that because you don't want to become accountants. You just need to understand what documents the accountants use. Now, after you've had a system of financial records, then you will all be told that what is this about property accounts? Many of us consider, of course, that the recording to be accounts. But essentially, when you have an interaction with accountants, you discover that accounts is now a more sophisticated component of outside recording. And for those of you who have gone through the training in basic accounts, you'll find that accounts then is how do you classify, and then you create now those transactions with a purpose of making decisions. You should know all this process of recording and entering transactions into documents and analyzing. The main reason is that you should be able to interpret and be able to inform either yourself as a company or as an individual, or also to inform your stakeholders. So there are quite a number of purposes of accounts, providing a record, providing what is the financial position, and also helping you to run the organization. And then, of course, measuring whether you are performing well or not. And then you'll find that I've talked about stakeholders. The other thing is that along the way, you need to analyze, or people need to analyze whether they can support you. That's if you want to take a loan from the bank, if you want to bring in new shareholders, or if you want to widen the partnership, you find that accounts becomes very critical. And I've talked about some of those users, which includes KRA, employees, and of course, now, what are some of the main types of accounts? The one which is known by everybody is financial accounts, which I think is, you see it being published and it's regulated. But there are aspects of accounting like management accounts. Sometimes when you are doing tenders, you are asked about management accounting, which is meant to assess whether your company or your business is likely to make profit or is likely to go into loss. The most funders, when you seek some money, you'll find that that's important. Then, of course, there is cost accounting, which then is decisions to assess whether you are using your resources in the best way possible. That is a presentation which gives you a clear understanding about the two. The two main accounts is financial accounting and managerial accounting. You can see the main users. Mainly financial accounting is external and managerial accounts is internal. Of course, the other types of accounts like custodial accounting, you will share this and then you can read. Performance accounting, that is what is now very common in measuring how you are operating. Then there is decision accounting. For those of you who do, of course, the net present value cash flow analysis, you'll find that that is one component which informs decision accounting. One of the things, of course, you need to know is that the accounting procedures which you are expected as a professional is that whatever you do has to be measured by a professional accountant in accordance to the international accounting standards. And those accounting standards have a way in which they are prepared. And this started in 1999. But for you to have also a fair understanding of accounting is that what do accountants really use to be able to make their decisions? And for those who are valuers, you'll find like issues of the basis of accounting. It's a rationale, or what is the thought process which is used in terms of doing valuation. So even for accountants, you'll find that they make certain assumptions. And some of them, which I want to highlight, is like the economic entity assumption. So as you do your business, you should always know that there is a difference between you as the individual and the business. And that's a very important thing in terms of running the business, that you and the business are two different. And as a result, you should always create a system where your own expenses are separate from the expenses of the company. Or when you incur some expenses in the course of your work, you're able to translate the same and ensure that they belong to the business. That's a challenge to a number of us because sometimes employees or even owners don't see the difference between the company and themselves. And if that separation helps in terms of picking expenses which are associated with yourself and your own domestic needs, so which you have to clearly separate. The other one, of course, which I think you need to know, you can read the other one, is about the going concern principle. Accountants assume that you will be in business forever. So your actions should inform the next financial year. And the other one is a cost principle, where they recognize assets on historical value. Now, most of our accountants, of course, valuers have a problem with that because we are all based on market value. But accountants look at the cost principle. So even if they're looking at property, they look at it at the cost and then they depreciate it until it's zero. Then there are other things about revenue recognition. This is actually the basis of accounting. Accountants believe that revenues are recognized as soon as a product has been sold or a service has been performed. So sometimes when you've done your survey work or evaluation assignment, the accountant will consider that you've earned the money, even if the money has not come. And that is quite a struggle among as you prepare your accounts. The other one, of course, on that basis is that when you spend, they recognize even if you have not paid. And then, of course, most of us, of course, prefer that one. The other one is conservatism. So accountants, when there are two alternatives, the accountant will choose the one which is more conservative. That is, they will take the option that is likely to result to a less expense or a less loss. And I've just talked about the revenue recognition, and that is informed by what is called the accrual basis of accounting. You'll find that in Kenya, the accrual basis of accounting is used even by KRA. When you look at the way they consider the way the KRA system is set, it is based on an accrual basis of accounting, where revenue is recognized when the earning process is completed and the goods are exchanged. In our case, where the services has been rendered. And the expenses are recognized when the particular item of expense is incurred, used up or consumed, irrespective of whether the payment has been made. So a little bit of that, I think we'll share this so that you can read. There are things about accruals, deferrals, and I thought that should be highlighted, especially for those of managers who have to, sometimes you receive rent in advance, and you have to allocate it to the various accounting periods. I don't want to get into that, you'll read that. So finally, once you've done all that recording for the whole year, you'll discover that you need to prepare final statements, or what are called financial accounts. These financial accounts is required for every entity which is in business. And principally, this is needed because at the end of the year, they need to know what is your financial position. Financial position means what money have you gotten and what are your expenses, and whether you have made some profits. And as a result, you'll be able to gauge whether you've made, you performed well or you performed poorly. It also helps in terms of knowing where your money came from and where your money went to, which is to establish the cash flow position. So in most organizations, you'll find that all organizations are expected to have a statement at the end of the year, which shows what are your assets, what are your liabilities, what is the kind of structure of ownership in the organization or in the company, whether it has changed or not. Then whether additional funding has been put in the business or additional money has been withdrawn from the business. So principally, you'll come across about in financial statements, it comprises 4 components. What is now known as a statement of financial position. Previously, it used to be called a balance sheet. So for those of us who are a bit older, and then there is, of course, a statement of comprehensive income, which was a profit and loss, which is simply whether you made a profit or you made a loss. And then there is a statement of cash flows, which shows where money has come from and where money has gone. Then you'll find that in accounts, there is normally a section, which is very important and it's good to read, a section of notes. When the accountants prepare, there is a section of notes. And those notes try to explain what are some of the policies which they've used in making the judgments or making the conclusions. And then, of course, there is a comparison. You find that accounts will have the previous year and the current year. So I've given a description of what are each of those statements are. Now, when you have more time, of course, there is a way in which those accounts can be analyzed and they can be of benefits for making various decisions. Just to link it then to what my colleague has done, in property management, and I know some of you are not in property management, but I think that is important. Now, we have already been told what a property manager does and how they carry out their work. And it's just to highlight a few things. An estate manager is, of course, a link. The estate manager is expected to prepare a number of documents. Now, those documents would ordinarily depend on whether you are operating as a sole proprietor, which means you might not be as sophisticated as maybe a large management company, and you probably have some software. Nowadays, there are software for property management which help you to prepare certain documents. So if you are a big organization, you might find you're able to generate a number of documents based on the software you are using. But the principal things is that there should be separate accounts for office and the client. So as you operate your business, you make sure that there is a difference between accounts for the office and accounts for the various clients you are managing. Principally, this could be based on a very simple cash book, which if you are doing a simple property, the cash book should separate what are expenses for the office and what are the expenses for the property, for the client. And then you make entries which are separate. You can read that. So once you've done all that, then there is a new appendage, and I think that is why this presentation has been tied to taxation. There's been a very strong reason why taxation is very important with accounts. The reason being that taxation, I think, somehow troubles most of us. And I don't know, when we go to questions, I think probably you will ask yourself why taxation has become very important. You will discover taxation has a very close link to your accounts. And as we run through this, you will find that there are periodical expectations for you to file taxation, which are then informed by how you are. So principally, we can assume that all of you know what tax is, because it's just a levy by government. There are many good reasons why there should be taxes. Then you can classify those taxes: business taxes. There are also individual taxes. Then there are also property-specific taxes. But there are other taxes which we are not going to cover. The key tax which is of interest to a number of clients, of our clients, the rental income tax. And just to highlight, there are two regimes when it comes to rental income tax. The two regimes is what you can call an old regime. And the change in the law, you'll find that the old regime is that commercial and residential properties would be taxed on a yearly basis. And you then calculate how much income you've received, and then what are the expenses. Then whatever is assumed to be profit, 30% will be paid to the KRA. And then in that old regime, then you find that any residential income of 15 million per year are still subject to annual returns with other, of course, annual returns with, of course, corporate, or whether it is individual tax returns. But the new regime is that any tax which is less than 15 million for residential is now applicable to monthly rental income tax, which is at 10%. I guess a good number of you are now doing it for your clients or also for your own individual. Now, there is a definition of who is supposed to pay, but essentially any tax above 288,000 per year is supposed to be paid on a monthly basis. So the rate is 10%. What are the due dates? The key due dates, and which is difficult presently for a good number of people to manage, and there are very serious penalties. The due date is always by 20th of every month. So as a manager, you need to know when, and you need to manage those dates. There are some exemptions from monthly rental income tax. If you are an unresident landlord, they're exempted. If you have rental income from commercial property, they are also exempted. And then landlords who earn rental income in excess of 15 million per year. There is also an option that an entity may elect by notice writing to the commissioner not to be taxable under MRI, but the annual income tax regime. So you can apply for that exemption, and I don't know from my experience of managers whether there are people who have that exemption. Now, there are penalties which you need to know. If you file monthly rental income tax, you find that for 2,000, you have a 5% tax due. Either you are charged 2,000% if it is there is 20,000, you are charged. Late payment is there is a 5%, and there is also interest of 1% month. How do you handle the mixed use property where you have commercial? The income will be treated in that you may elect to file and pay tax either in the monthly regime for amounts up to 15 million, or the annual regime if the income is above the 15 million. And then where the gross annual rental income is from,
Vincent. Hello, Vincent. Hello. I think you have gone on mute and we can't see your screen. If you kindly reshare again, share the screen and you unmute yourself. Sorry, it's probably a technical hitch somewhere. Kindly.
I'm back.
Yes.
Okay. So
Yes.
let me take you back to the screen.
Yes.
We are back.
We are back. Thank you.
So we were at VAT, and I think we have highlighted that. One of the key things to know, and you need to have your accountant to advise you, is how to compute VAT, which is essentially what is the output VAT and what is the input VAT. Now, the challenge, of course, for most professionals is that a good number of our transactions are not receipted. And even where they are receipted, you find that there is no VAT charged. Or some of the things like if you are traveling, if you are using your own vehicle, you'll find that you'll hardly have inputs which are VAT and which you would then gain by subtracting it. You'll also find that when you are paid, already 2% is already taken away as VAT. And if you're able to keep now, that's the importance of record keeping. If you're able to keep your expenses and be picking receipts, and hopefully your employees are also picking receipts, you're able to reduce how much VAT has been you pay at the end of on a month-to-month basis. Of course, there is the provision that if your income annually is less than 5 million, then you are not expected to register for VAT. But you'll discover that if you are to transact with most clients, even if your income is less than 5 million, you still need to register for VAT because they'll expect ETR receipts. So you principally as a practitioner, you can't avoid. The other tax, of course, is income tax. This one is taxed on business income. When you fees, employment income, when you pay your employees, you have to remit the pay as you earn. Then there are dividends. If at the end of the year you declare that you made some money, there is an income tax you have to pay. There are also income from other sources, which I guess most of you also have. The key one is pay as you earn. So if you are running a practice, you are expected to have registered for pay as you earn for your employees or also even for yourself. And this is graduated. There is a scale which changes, but currently it ranges between 10% and 30%. You also compute the relief, and always have to manage that by 9th, you have already filed your pay as you earn. The corporation tax, at the end of the year, if you made some money, if you are a company, you need to pay 30%. We were reduced it to 25% the other year, so during COVID times. I hope we benefited from that. There is a hidden tax, which most people don't get to know, the withholding income tax. You'll discover most of our payments are subjected to withholding income tax of 5%. For contractors, is 3%. Now, this is deducted, but when the accounts are prepared at the end of the year and you file now your annual returns, if your income has been withheld and it is then netted out of any profit or any tax you need to pay. Then maybe just on its installment tax, you'll find that, of course, Kerrago hardly refunds you, but you will find that you can claim it for the years when you make a profit or when you have to pay some money. So it's important that it is computed and it's tracked and it's properly recorded. Then the other tax, which is there, is installment tax. This is just part of the income tax. It's just that it's assumed that the KRA assumes that at the end of the year, when you prepare your accounts, you are supposed to have anticipated a profit. And as a result, they expect you by the 4th month of the year, you should be able to pay some income tax. So most of us, of course, get caught up with this because many times probably you don't even know whether you'll make a profit or not. But you are expected that by the 20th day of the 4th, 6th, 9th, and the 12th month, you're supposed to make some payment of whatever profits, a percentage of whatever profit you
You can unmute Vincent. We are disconnected again. Sorry.
You can hear me now?
We can hear you. Waiting for the presentation.
Yeah. So there is the installment tax. So every 20th day, you'll find nowadays there are reminders actually from KRA. How do we calculate the installment tax? That's what people normally have a challenge. It is assumed that you're supposed to know what was the profit you made the previous year, and it's assumed that it will grow by 10%. So it is prior tax paid, you multiply by 110%, and then now you pay every 4th month, and it's indicated earlier. The other way of computing it is through what they call current year basis. You estimate your current year profit and the tax payable thereon. Are you with me, Joy?
Yes, we are waiting for the presentation. You can see the presentation.
You can see the presentation?
Yes.
Let me see. Okay. You can hear me, Simir?
Loud and clear.
Yeah. So it's the presentation which is not coming on.
Yes. Yes.
Oh,
yes.
Oh, okay. Has it come through?
Yes, now we can see it. Thank you.
Okay. So I was just indicating how the basis of calculating the installment tax is that it's, if you are not able to calculate it, it's assumed that your previous year profit, that is, if you made a profit, then you multiply by 110%. That is assumed to be the profit you are going to make that year. Then you divide it then into 4 quarters, and you remit it at the 4th, 6th, and 9th month, and of course the 12th month. Then if you can't do that, of course, if you made a loss, then you use the other basis. What is the current year basis? You estimate what is your current year profit and the tax payable. So it's assumed that by the 4th month, you can estimate how much money you are going to make. And using that basis, you then you divide it by 4 and you continue remitting. Then, of course, there are the other property taxes, just for purposes of information. There is stamp duty charges. I think we know that its rate is 4%, and who pays it? By the purchaser. Then there is the capital gains tax. Currently, This is charged, of course, when it's individuals or your clients sell property. The rate is 5% currently, but it has been amended so that in 2023 is going to be 15%. A good number of people are uncomfortable with that, and that's paid by the seller. One of the things you'll find clients starting asking you is, how do we manage that? How do we reduce the gain? And I think it's something we can encourage some of us to specialize in, so that you'll be able to find a basis. You'll find that advocates are document. So that is it. I think that is a snapshot of accounts and property taxation. There are quite a number of taxes, of course, which affect us as professionals in business or as we do many other things. And I think I encourage you to spend time and learn what are the other accounts. But these are the principal accounts and the principal taxes which are applicable and which can inform your daily business progress. So thank you very much. Just like I normally share with my students is that happiness is not in the mere possession of money, but it lies in the form of achievement and in the thrill of creative effort. I think in our practice, our focus, of course, should be to create wealth, but it's not about money. But it's about what we are able to achieve and what we are able to be creative, and creative in many ways, in a manner, of course, that is financially feasible and beneficial to each one of us as professionals. Thank you very much. Joy, over to you.
Thank you very much, Value Vincent, for that overview on issues relating to accounting, property accounting and taxation. I think now we get to appreciate the scope of it and what affects our profession or our day-to-day functions, especially with what relates to taxation. So at this point, I want to say thank you to the presenters. I would like to invite a Q&A session from the members who have joined. I think we have a good turnout. We picked at some point at 225, so it's a good number, and we encourage such a kind of sessions. So I'll put the questions to the members. What you can do is probably raise your hand, then we'll pick you up as we go. If you cannot be able to speak, then you can just put it on the chat box and you can be able to move on. Thank you. Members, any question or concerns as to regarding the very comprehensive presentation that you've just had? That you're most welcome. Just raise your hand, then you can be able to pick up, or you can put it in the chat box. Question on the chat box to Mr. Kerrago. Mr. Kerrago, I don't know if you're still on. You can hear me? Mr. Kerrago?
Yes, I am. Thank you, moderator. The question was about what you look for in a bank statement.
Yes.
Actually,
yes.
I think for bank statements, that was a general statement. You look at the run of the account, the business volumes, and I think basically looking at just taking an assessment from both the activity and the revenue, one is able to tell the run of the business. But in fact, more important is to what you usually maybe you want to ask for is a bank reference, where the prospective tenants, and the banks have this almost as a standard document, then give an opinion on the business or the person, and you know that will guide you. So bank statements, but they cannot. Bank statements can be is more of a secondary option. Yeah, but the run of the account.
Okay. And what and on that note, is it agreeable to when a new tenant opens up a new account in relation to that particular property or in relation to that particular account that they'll be running in terms of their lease, would that justify with just a letter from the bank, or there'll need to be proof of transactions that of money coming in and going out, or that will just be sufficient?
Again, the letter is better because it's an opinion by the bank. Huh? Mm-hmm. But in fact, if it's a running business, which most of them will be, they will have had an account for some time. Because again, the objective is to assess whether basically they'll be able to pay their rent. But it's also usually a problem sometimes if it's a new business that doesn't have a bank account for the particular intended business. So then what one asks for is then an opinion on the proposed directors, either their personal accounts, because at the end of the day, you have to engage with somebody who has had some experience and therefore some banking and transactions to as a basis and a support to their application.
Okay, thank you. There's another question for you. In respect to service charge management, what are the remedies defined by law for recovery of amounts owed by the landlord? I think this one relates to the sectional properties that you had highlighted earlier. What are the remedies to service charge management for recovery of amounts owed by the landlords?
In fact, that is a problem because there are no specific remedies in law. As compared to rent, rent is covered under the Distress for Rent Act. And it is the case, or it has been argued that service charge is not rent. And therefore, you cannot distress for default or arrears of service charge. So as far as I know, there is no real legal-based remedy. And therefore, that is why then it is designed into the agreements that the management company can then use a leverage on the utilities as I indicated. It has been arguable in law, but that is really the remedy.
Thank you. I think the next question goes to Value Kipto. Any highlights on construction site taxes and incentives for affordable housing?
Okay, thank you very much. I think I'll ask participants to answer that one. Is there room for participants to participate? Joy?
Yes. They're allowed if someone has engaged or interacted or is practicing something that relates to affordable housing and construction. I think he can give their own opinion of their experience. So if there's a participant who has engaged with that, kindly answer your fellow member, please.
Maybe Joel, they can raise their hand so that we can unmute. Perhaps they could be facing a challenge of unmuting from their end.
Okay.
So as they do that, I can see there is a question, of course, on stamp duty. It is still it's still 2% for agricultural and 4% for urban. It has not changed.
There's another one also where someone asked, Job Kagwongo asked, what is the position when clients want an ETR receipt and you are below the 5 million bracket?
Ordinarily, of course, you'll have a challenge with that. Because the clients have, I think we've had a system where ETR receipts are made like they are mandatory by KRA. And you'll find most clients will want those ETR receipts. So you'll find many times, you find as a professional, you just have to get an ETR machine. Because what you tell them is that you are exempted. But I don't know whether you'll be able to tell them that you are below, your income is below 5 million, which could disadvantage you. But you'll find if you're able to tell them, I'm not ETR expected, I'm not expected to issue ETR receipts. Like you find when you work for charitable institutions who are exempted, who have some tax exemptions, or they have some tax privileges they enjoy, or the UN agencies where they don't expect you to charge them VAT. But as a practitioner, you'll find that you are better off with an ETR receipt. However, it's what the investment for you to do business, because sometimes they also view you like a less professional when you can't give an ETR receipt. So it's a juggle. The law doesn't mandate you. You have that option, and you are, of course, if you don't have an ETR receipt, you are also expected not to charge VAT in some instances. But from my own experience, you are better off even if your income is below 5 million, you have with an ETR receipt, and you charge VAT, and it helps you in terms of complying with KRA and of course getting the tax compliances for purposes of getting business.
Thank you so much. We'll go to the next question. I think this one directed to you, Mr. Kerrago. How do you premise charges in managing sectional property? Well, I think he meant the service charge. How is it determined when you're doing a sectional property?
So if I understood the question is regarding how you premise or charge management fees. Is that correct?
I think if Abel is on, he can clarify that. But I assume probably he meant how do you determine the service charge amount for sectional property?
So if it is a service charge amount, you start with the budgeting. Basically, you do a budget projection for the year. Charge management fees. Is that correct?
I think it's Abel. Abel, kindly wait, then you can ask the question, or you can ask the question. Abel, please clarify.
You start with the budgeting.
I'm on.
Basically, you do a
yes, you're on, Abel. You kindly use one.
Okay, my question is on the fee.
Oh, management fees.
Hello, my question is on the fees. How do you set your fee and justify it?
Okay.
To that question, Abel, first of all, fees for sectional properties, as you might realize, is actually not covered under the current statute, under the Estate Act. So usually, I think and this is a gap, by the way. So I think it's a question of mostly you assess your time involvement in terms of professional inputs, time, and other resources. You also, I think that one of the considerations is the number of units. But at the end of the day, you have to do a calculation that can reasonably cover your professional time and administrative expenses. Basically, I believe that's how we do it, and probably what most of us are doing, because it's not covered under the statute or the scale. So it can be fairly arbitrary, so to speak, based on that premise and calculation.
So it can also be a fixed amount?
It is not, no, it's not a fixed amount. Because again, you may be looking at a situation from anywhere between 20 units, 30 units. There are situations where you're looking at 200 units. So basically, again, you just calculate your time involvement and other inputs. And then, of course, as a business, which we all are, as professionals, you add a margin for it to be profitable.
Thank you.
I hope that answers the question.
I assume that one is clear for Abel.
There's some.
First of all, thank you, James, Kerrago, and Valio Kipto for very, very good presentation. Very informative. And I just wanted to add a little bit onto a question something that was answered by James Kerrago earlier on in the remedies for default of payment. You cannot, for service charge, you can of course not distress for rent, but I think I'd also advise the managers to check the individual leases, which usually gives the remedies in default. And that is usually engaging an auctioneer, and even the property itself can be sold. So one needs to look at the lease itself that provides for what service charge is used for and what happens if one does not pay, in addition to the utility options that you had given. A question that I had for Kipto is with regard to the taxation on service charge. It is always assumed that, of course, we are not having trading companies, so we do not pay any taxes. But depending on how your audit has been done, what KRA looks at is anything that reads income. So if you indicated income, sometimes they come down on you for payment of income tax. So Kipto, how would one avoid KRA assuming that excess service charge is an income and charging for that? And two, some companies, some properties put the excess service charge in money making, in interest earning instruments, and they are charged taxes on that, if I'm not wrong. Could you kindly shed a little bit of light on that, on both of those? Thank you.
Okay, thank you. Thank you, Sam. Service charge is, of course, supposed to consider as a contribution then used to be expended in full, that there is no surplus. But of course, all of us know by practice is that by the close of the year, you find that there is some service charge which is excess. Now, there is a way in which accountants account for service charge, whereby whatever is surplus is not considered as a surplus. It is considered as a contribution, which is then used in the next financial year. And for purposes of service charge for commercial buildings, because there are two types of service charge. There is service charge for residential buildings, mainly raised for management of common areas. But then there is also service charge, of course, for commercial buildings, where at the end of the year, you're supposed to do an audit, and whatever money is excess is supposed to be refunded to those who pay, the contributors, or it's supposed to be used in the next financial year to their credit. So the whole idea is to make sure that the accounts are done in such a way that there is no profit and there is no surplus. So accountants have a way of making sure those accounts are not considered like it is trading. It is considered as people have contributed, like a fundraising, and then when whatever money is saved, it's supposed to be plowed back in the same principle in which at the end of the year, an excess service charge is supposed to be refundable, so that you arrive at a zero balance, and they do that. The only thing is that you need to explain to your accountant that this is how the service charge operates. You will find that most traditional accountants, they would just look at expense, revenue minus expense equals to profit. And unless you explain, it is not money that will be used to pay dividends, or it will be used to earn income. It is not actually an income which is earned. Now, where then you have the excess money, you'll find that the shareholders will say, why are you keeping money? Why don't you put it to generate some money? Now, if that money is put into, let's say, the stock exchange, or it's put in bonds, you'll find that there'll be an earning. Now, that earning is some profits. And you'll find that by the time it comes to you back, they will have already withheld some tax. Now that then puts, of course, the estate or the management company into some quandrum, because they've put the money into an investment vehicle, and the activity they have engaged in is an activity that generates money. So that one you'll have to discuss with the accountants, so that it is accounted in such a way that it doesn't become profit. And when KRA visits you on that, you are most likely going to pay something on interest which has been earned, because that is a business activity which is outside the intention of a service charge. I hope Sam, you're satisfied. Sam is muted.
Yes, thank you very much, Kipto. Asante sana.
Yeah. Okay.
We can proceed to the next question. I think it is still on you, Kipto. Rashid asked, what is the logic behind exempting investors earning income over 15 million from Mri tax?
Yeah, so it's all about managing what is income, or determining what is income. Of course, 15 million is a very high ceiling. I think the assumption of exempting them is that the cost of earning 15 million and above will involve so many expenses. So if you have a property which brings in 15 million, it means you are most likely going to have a very elaborate property management company. You are going to have so many other maintenance costs. Your maintenance costs are so significant to an extent that your tax, your tax cannot be based on just a 10% of your rent. So it's assumed that you are able to, at the end of you need a suitable period to be able to identify all the costs and then subtract those costs and say this is actually the income which is above the expenses, and then subject that then to tax. that probably is the logic. Because even the current 10% is quite an uphill task, especially when you note that if your rent is about 50,000 and you have to pay 5%, 10%, which is 5,000. It's a major component of what you would expect to get from a property, and noting that you cannot subtract any other expenses because it's based on the gross rent received. So maybe there is another question.
Yes, there's another question. From Evans Mwema, in regards to the new VAT system, the teams, should managers be allowed to generate invoices captioned with their firms, noting that we represent landlord with different KRA pins? Case in point, government tenants decline invoices issued by managing agents in care of landlord due to differences in consignee and invoice issue. I think this is an issue that even other than the government entities, even corporates would prefer invoice attached to the name indicated on the title or the lessor. So what's your thoughts on the use of the teams that now is supposed to take effect 1st of August and regard to this?
For one of the things as state managers is that we are agents, and many times I think we take so much which ordinarily should be for the landlord. So in certain cases, especially when I think one of the things in the presentation I needed to highlight is the separation of what is and what are the operations of a company which owns property. So in certain circumstances, you might actually have them which is in the name of the company itself. So that the ATR receipts are issued in the name of the landlord, not in the name of the management company. So you have to create a balance on what you can take and what you can account for in terms of taxation, and what you should let it be done in the name of the landlord. So if it is so significant, then you might just have a separate ETR, just the way you have separate accounts. You even have a separate receipting. And then now your role is as an agent is how you're able to communicate the ETR receipts and even the invoices, how you're able to merge the two so that you are seen as an agent who has power, of course, to implement the principal's business, but still make sure that obligations which belong to the landlord are managed for purposes of the landlord, and they are not mixed with the obligations of your individual company or as an estate agent. And I think that is also why you find also government are very keen to be able to identify who exactly are they dealing with, and not the agent. So it's a balance. It's a balance. You have to look at it, and sometimes it is advantageous actually if you're able to generate invoices and even generate ETRs in the name of the landlord.
Thank you for that. The next question is addressed to Mr. Kerrago. From Catherine Kariuki. As a property manager, how can you help reduce on the cost of running the properties? Mr. Kerrago?
Okay, I've actually been answering a few questions on the side, but now basically start with I think, competitive procurement of various services at the beginning. So when you engage security companies, for example, and those are the expensive items, competitive bidding, so to speak, number one. Number two is in the course of normal operations, then you ensure that one, there is timely maintenance. They say a stitch in time saves 9. So if something is leaking or broken, you fix it early, otherwise then it become more expensive down the line. But number 3, of course, then you ensure there is no wastage. And there are some simple examples. You'll find in residential apartments, things like leaking pipes or taps, washing cars, obviously that is going to wastewater. Lights that are left on in commercial buildings through the night. So for that, the caretakers then have to be on top of what is happening on the ground. But just prudent management and ensuring efficiency.
The next one.
You also follow the budget and try and stay with it.
Okay. There's another question to you, addressed to you. For rental payments made in foreign currency, how do you handle fluctuation in exchange rates?
Those foreign exchange leases, as far as I know, are quite rare nowadays. However, if a landlord chooses that option, then it comes with the risk. You have to accept the risk that it will move upwards or downwards. So basically, whichever way it moves, having chosen that option, you have to accept the conversion factor and risk. So a rental of $1,000 a month somewhere today, maybe 100,000 equivalent Kenya shillings this month, maybe 105 next month. It's just the risk that goes with that option. So you can't really control it.
And you can't. Would it be okay if you agree on a fixed rate that can run for say a certain amount of period until probably you see how the economy progresses probably after 6 or 3 months?
The question, if I understood it, was if you have say a dollar denominated rent.
Yes.
What is the risk? You can't have both. If you accept you want or you choose to have a foreign denominated rental, then you just have to accept the risk. So you can't fix it, it will move. So basically, in those situations, you receive your rent in dollars or whichever currency. Then, of course, having received it, then you convert to the applicable exchange rate at the time of receiving.
Of course, then also there are risks of availability of the foreign exchange, the currency, given the economic situations as well.
Yeah, there is that factor now, yes.
Mm-hmm. There's another question from Job Kagwongo. Are there any regulations on rent charges for residential and commercial premises, or is it upon the landlord? I think this one is determining how you determine your rent for a certain property. I think that should be to you, Mr. Kerrago. Mr. Kerrago went offline, so we'll keep that question as that and try to see if he'll come back on and we'll ask the same question again. Nelly Mbugwa asked, I would think sinking fund is not subject to tax, or should it? I think this one is directed to you, Valuer Vincent.
Which question is that?
In regards to sinking fund, I would think sinking fund is not, if something sinking fund is subject to a tax.
If Though if you create it as an expense, it's then deducted from the income. So it becomes an expense, and so what is taxed is what remains after it has been deducted.
And what if in the case this money is put into a fixed deposit instrument where it's earning interest?
If it earns interest, then it is subject to tax. The interest itself is the tax. The interest, it means it now generates a profit. Anything that generates a profit is what is then considered as taxable. So it's just like if you put your money in a fixed deposit account, whatever interest you are paid, that is taxed as an earning.
As an earning, okay. But in the books, the amount is, the sinking fund itself is taken as an expense.
Yes, you have to take it as an expense because it is a sinking fund is supposed to be an amount which is kept to replace the property eventually. If I remember what we learned at the university. So once you pick it, it means you are using it as an expense on whatever money you've received. But I think for that, if you treat it as an expense, that is off. Now, when it becomes substantial, that is when you will have to talk with your accountant so that it's very clear how it is treated. Whether it's treated as because along the way, the accountant might treat it as an asset. And then there is a way in which assets are amortized.
Okay, yeah. Is the service charge for office suites or under sectional property vatable? I think a question from Patricia. Service charge for office suites or commercial property, are they vatable?
Commercial, yes. Office suites, commercial, they are vatable.
That going back to you, Mr. Kerrago, there was a question in regards to guidelines from Job Gakongo is asking, are there any regulations in determining your rent chargeable for commercial and residential properties? Or is it upon the landlord? Mr. Kerrago?
So I'll actually start responding. The answer to that is basically that I was saying it's a willing buyer, willing market, like most commercial situations, and that is dictated by the market. So there are no controls as such, unless they are controlled tenancies, and then for those, of course, the necessary tribunal procedures apply, and the formulas. So yeah, open market. But having said that, it is more the landlords who actually set the rentals based on the information, from the market. Of course, a prudent landlord will charge what is a reasonable rent to secure and maintain tenants. That would be my answer.
Thank you. There's a question just in regards to co-working spaces. From Catherine Karaoke, on co-working spaces, what kind of arrangements do you give and how do you protect the landlord from controlled tenancies for co-working spaces?
On that one, I'll actually have to say I'm not very familiar with that. And it's something that we approach with caution. But basically, you give a lease to an operator who then understandably is going to give other people use of the premises. And I think in the underlying agreement, we've had this before with what were being called, the stalls. And those come with their own risks. So you can only put a clause within your main lease your main lease, that makes it a condition that the landlord will not be exposed to any undue negative outcomes from such, because it can be argued to be subletting, and by extension, it can be argued to be controlled tenancies. And in fact, it has actually happened in some situations. So it is an area that is right now, in my view, in my limited experience, quite not very clear legally and what sort of arrangements you may have. So sorry, I don't have a very precise answer about that. Or I can only say it's a bit risky. Thank you.
Thank you. I think we are almost through. We have, on the last few questions, I'll probably do 1 or 2 questions, then you can conclude on the same. There's a question from Patricia in regards to the VAT. Vincent is asking, she's asking the tenants who withhold VAT or rental income erroneously using the wrong PIN, say they run the PIN to the property managers instead of the landlord, and how does Kerrago handle such? Or how do you remedy such? When a tenant inputs the wrong PIN.
Maybe Kipto is better placed to answer that.
Yes.
Yeah, it was directed to Kipto, sorry.
Kerrago, you should have answered that one. You have many years of experience in property management.
Sorry.
Maybe just to indicate that the landlord is expected, of course, to do like the 10% at the end of the month. Now, if a tenant has withheld part of that, let's say if they have, because I know there are those who have been authorized to withhold, then they should give you the same thing. They should file the same returns like they do with VAT. When 2% has been withheld, and whoever is paying you file the return to Kerrago, so that when you are filing, there is a credit. But I don't think I've had an experience on that in terms of the tenant withholding a percentage, which is the portion which ordinarily you would pay, and then they're supposed to file a return. Then when you are filing your monthly MRI, you would then take a credit. That's why I was asking Mr. Kerrago. Probably he might have had an experience with that. Kerrago.
Sorry, I didn't get the question.
The question is that if a tenant,
yes,
who is supposed to pay like residential income, maybe 100,000, and they know as a landlord you're supposed to pay the 10%, which means you're supposed to pay 10,000 to Kerrago, and they have been authorized because some tenants are actually withholding agents for rent or for rental income. So if they withhold, then what would you do as the managing agent, or if you are the one who is filing returns on behalf of a landlord? And what I was saying is that it takes the same operation, the way the VAT is, that they are expected to file returns, and they give you and generate a documentation to that effect, so that you use it as a credit. But that's why I was asking for your experience, Kerrago.
My experience, and I think the interpretation would be, if they are withheld, they can only withhold on the basis of also issuing withholding certificate, and it happens. So if you get the certificate, then of course you offset it against the eventual tax returns in the way that certificates work. In the event that there is no certificate, and that also happens sometimes, then you treat it as unpaid rent because it has not been paid and there's no certificate. So basically then it becomes arrears. So withhold, but provide the withholding tax certificate.
I think the question was in regards to erroneous entering of the PIN instead of putting the PIN of the agent instead of the landlord, but I'll ask Patricia to clarify the question. Patricia?
Okay, my question was, we have tenants who normally withhold using the wrong PIN. For example, they will withhold using the agent's PIN or the property manager's PIN instead of the landlord's PIN. How do you correct that?
My experience on that is, well, as you know, with tax issues, once you have a problem, the engagement with KRA to do any reversals is a challenge. So the first thing is that you have to make sure from the outset that, and this is communicated to tenants, if they're going to withhold, you provide the landlord's PIN. It is understood that the landlord is a beneficial, is the one who benefits from the rent. If it happens that it is done wrongly, then unfortunately it's a very protracted discussion with KRA to explain and have it reversed. So there is no clear-cut answer other than to make sure it doesn't happen. And then if it happens, you go and explain to KRA. Yeah, that's my answer. Unless maybe Kipto, you have an additional input on that?
No. I think that's a very clear position. KRA is not a very easy institution to deal with. But the position is that you have to provide the landlord's PIN so that they find to the right account. So I think we can proceed to the next question.
We'll take the last two questions from Geoffrey and Rachel. Now this is now an institutional question. If now ISK could, how can ISK institute a legal framework for enforcing collection of service charge? On a second issue, is the property market ready to withstand the proposed 15% capital gains tax come January 2015? And how do we lobby against this as stakeholders? It is a general question. So what is your opinion of that?
Joel, is it addressed to any particular person?
Divided into two. I think the first bit is on your opinion of if there are any legal framework that can be instituted by an institution such as us, and probably the second one would be to Vincent in regards to the capital gains.
So I think for the first one, there is an ongoing legislative process going on with regard to the Sectional Properties Act. You can correct me if I'm wrong, but I believe that there was even public participation. And I think that is then where inputs from the sector and the industry come in, from ISK, from everybody concerned. I actually don't know the exact position, but I can only see that would have to be, for anything to have some legal force, collection enforcement. Just for example, like the Distress for Rent Act, it has to follow the legislative procedure to make it law. So I guess all of us and ISK can play their part. Yeah, that would be my view at this point. But maybe if somebody knows where that, what's the position on the Sectional Properties Act, maybe they can shed light on that in that context. Thank you, John.
Thank you.
Maybe just on the other part of whether ISK should lobby. I hope Mr. President is still with us. it's important for us to analyze whether the change to 15% will affect our business as professionals. Of course, definitely for those who are selling property, it will affect them. It's a very difficult thing. And I think the reason why they've raised to 15% is because the lawyers have come up with a very interesting way of justifying expenses, so that whatever is considered gain is very low. So Kerrago has not been able to collect so much money from capital gains tax. But still, it affects transactions, because many people will not sell property because of that, which means our business as estate agents is likely to be affected because of the increased costs. And there is always no benefit when government charges so much. It affects the profession, the business, whatever business you are doing, if the tax component is very high. So probably we should analyze what will be the effect on our business, and with that, it should inform our action, and we probably need to look it through the institution.
Yeah, that is food for thought. I'll also refer that to my chair, Ayub. Hope he's listening. The last question from Rachel. From the discussion, understanding is that 10% rental tax is payable for the residential properties. However, you find that some tenants for commercial withhold 10%. How do you address, as we find Kerrago demands that the government bodies to withhold rent on rent? How do we address this, as we find that Kerrago demands the government bodies to withhold on rent for commercial basis? I don't know if you have understood the question.
Yeah, I think what's important is that as a manager, you need to understand the tax regime that affects especially commercial properties. Because in the presentation, you noted that if the income is more than 15 million, and for commercial properties, there is an allowance, so that you're able to capture all your costs before you can apply, you can pay the rental income tax. So probably to be able to capture that for properties which are not subject to the 10% rental income tax, the monthly income tax, you might have to address it through either the lease, so that the lease is very clear on how taxes will be dealt with, in accordance, of course, with the provisions in the law, and then communicate to the tenants what are the applicable taxes and what can they withhold, or whether they should even withhold, especially if the applicable requirement is that rental income is paid at the end of the year after you've removed all the expenses. So that will depend on the individual property and how it is treated by Kerrago and the provisions for that.
Thank you very much. I think I'll put now this session to a close. I'll thank you again, the speakers, for your time and your effort, Mr. Vincent Buret and Mr. James Kerrago. It was an engaging session, and I hope it sets good precedents for the professionals outside there, and we can have other similar discussions. At this juncture, I would like to invite my chair, Mr. Ayub, for the closing remarks. Thank you. Ayub?
Good. Ayub? Yes, you can hear me?
Yeah.
Yes.
Yes. I hope you're able to. Yes, thank you. Thank you very much, Joel, for the wonderful facilitation. I also want to thank our speakers, that is Mr. Kipto and
James Kerrago.
Hello?
James Kerrago.
You can hear me?
Yes, yes, I can. Yes, yes, I can.
Yes, I want to thank our speakers, Mr. Kerrago and Mr. Kipto, for the wonderful presentation and for the insights. It was a wonderful refresher to all of us. Sometimes you end up doing the wrong thing for a long period. So you end up, you might end up thinking that that's the right way of doing things. But at least the reminder from Mr. Kerrago, basically taking us through the highlights and reminding us of our roles and what we need to do was quite insightful. Then from Mr. Kipto on the financials, coming out very clear. And I know it's a discussion that we need to further, even through our socials, and also planning for more webinars on the same. So thank you for the wisdom and the knowledge. I also want to thank the participants, very active. The chat box is quite active. Questions are still coming in and comments. Thanks to all of us for the patience, even for your time. I also want to thank Mr. Maina, who opened the session, and also our president. Together with the Secretariat for the coordination, and even for helping us admit members. Thanks to everybody. I just want to share a few announcements. One is on ISK membership management system. We are encouraged to update our contacts and our membership details. Some of us, we don't get that link where every time we join or we book a meeting. So we need to update our contacts and our details. Then from the communication that we got yesterday regarding the meeting between ISK, LSK, and the Ministry of Lands, we were encouraged to register as professionals on RDSASA, even as we push the ministry to address the issues that we brought to their attention. It's important that we register on the platform. So if you've not registered, kindly register. And I know as we do that, we also need to encourage our clients, the clients that the regular clients and the ones that we engage through valuations once in a while. We need to encourage them to register and open the property accounts on that particular system. Then in terms of basically what's ahead of us, we are having the regional conference in the month of November from, is it 9th? I think from 9th, yes, from 10th to 11th. So we are requested to note that in our calendars. The conference will be happening in Kisumu, the city. So let's take note of that and prepare to avail ourselves. And the details of the same will be shared by the Secretariat. There are members who requested for presentations. I hope Mr. Kerrago and Mr. Kipto will share them with the Secretariat so that we're able to share with our members for revision and also for at least refreshing our knowledge. Then we also encourage to attend chapter meetings. The meetings the chapter meetings are on forthcoming, I think, in the next few weeks. So let's attend, let's participate, let's keep engaging. Then lastly, from the property management chapter, we are coming up with the property and facility management standards. The draft is ready. The task force has already come up with a draft. We are reviewing and discussing it internally. We'll be sharing the same to all of us through the Secretariat so that you're able to basically go through it and make comments. I want to encourage us to go through the document so that we're able to improve it and have something that can guide us. Some of the things that are being discussed and being mentioned are also covered in that particular standard. So thanks to everybody for your time and for active participation. Maybe, Joel, do we wrap it up? Or there's anything else?
I don't know if there's anything else from the Secretariat. If there's anything. Madam CEO, any remarks?
Thank you, Joel. Not at all, just to wish you the very best and to thank you all the members for participating. Thank you so much for your support. Joel, we can end it there. Thank you.
As we began with a prayer, it is only fair that we also close with a prayer. So I'll invite a member from the membership to just give us a word of prayer as we close. And also encourage you to be safe and precautious, take care of your properties during the coming elections, hoping that you have done all the procedures with relates to such kind of an environment, but we hope that all will be well. Thank you. So if a member could just volunteer to pray for us, then we can close. Thank you. If not, then I can request Pendo, if you can kindly close with us without a prayer. Thank you.
Thank you. Thank you all. And let's believe and pray. Almighty Father, we come unto you with thanks and thanks for enabling us to learn from the experts, and also we request that you enable us to remember whatever we've learned and also put it in practice. Now, as we're going to move into our subsequent activities for the day, we pray that may you be with us, may your will be done today and tomorrow as well. We pray, believing in your holy name. Amen.
Thank you.